this is Eric Thompson. I am president of Peerless Wealth, a registered investment advisory located in Columbus, Ohio. As always, thanks for tuning in. And this one is on the election. We're at that time of the year, obviously. You're probably getting this in mid to late September, and it's on everybody's mind. And there's a lot of media attention, obviously. And you probably have a lot of questions. Should you alter your investment strategy? Do you even have confidence to invest altogether, given the uncertainty of who's going to be leading our country? And as I've always told clients, I aim to be the voice of reason in an otherwise unreasonable world, and to provide you with some do's and don'ts in circumstances such as these. I've been doing this a long time, pretty close to 25 years now, and been through a lot of elections, and I see how they tend to play out. And one of the things I always tell clients is to remember, you're invested in companies, not politicians. And I'll say that again, you're invested in companies, not politicians. Even if these companies are shares of stock that you held indirectly through mutual funds, these companies, be it Walmart or Apple or McDonald's, probably going to still sort of do business as usual, despite who the next president is. And that's really what you're invested in. There will be some circumstances and some examples. For example, let's say Harris gets elected and gets through some policies against, fossil fuel related energy companies. Well, maybe ExxonMobil stock drops a little bit, but at the same time, maybe there's some additional incentives toward clean energy companies. Maybe Tesla stock goes up, right? So you can have some winners and some losers, but if you own a little bit of everything on balance, you should be okay. But I wanted to show you some statistics and some wisdom to kind of maybe keep you calm in a time of the year that it's easy maybe not to be calm. So let me first answer a question that I hear a lot of clients and friends and family asking me: What do Democrat presidents or do Republican presidents return more for the stock market? And when I say the stock market, I mean the S&P 500. So does the S&P 500 do better under a Democratic president historically or under a Republican? So the data, I'm going to show you chart number 1. This says S&P 500 performance compound annual growth rate. The blue, and this goes back to 1957, all the way over there on the left. The blue is Democrat, red is Republican. And if you average all the blues, it's 9.3%. If you average all the reds, it's 10.2%. So this presentation of the data would lead investors to believe that we do a little bit better under Republican regimes. However, whether we get 9 or 10 is pretty darn close, and quite frankly, I'd be happy with either. The key is get off the sidelines instead of making 0 in your bank, right? Whether it's 9 or 10 is a much smaller issue. But let me show you the next chart. Again, the S&P 500 performance. This is annual returns, but it's the median annual return. It's a slightly different way of calculating it and looking at the data. And under this method of collecting the data, Democrat president median annual return is 12.9. Republican president median annual return 9.9. So you're going to see data spins depending on what the person spinning it wants you to believe. But either way, it's actually not too far apart. There's really no clear, there was really no clear sort of answer or pattern. They're both pretty good. There's a lot of other factors, macroeconomic factors. There's timing factors. For example, when Barack Obama got elected, it was late 2009, and we were in the midst of a financial crisis, and the S&P 500 had basically bottomed out. The banks had failed. There were bailouts that were in or in process of happening, and the election coincided with somewhere pretty close to a market bottom. So those, his term looked incredibly good because of the timing of when he got in office. So there's a lot of other factors that can cause this. And I'm going to show you another illustration too. This one's from Capital Group, which runs the American Funds, which is a fund family that I use on occasion for clients. And this one's titled, it's kind of the same thing, just looking at it a little bit differently. This one's titled, Which Political Party Has Been Better for Investors? And this goes back to 1933, all the way over on the left. And the blue is, again, Democrat, and the red is Republican. And they don't actually give you the numbers here, 9.9 or 10.1 or whatever, but it's more of a visual thing. It tends to go up no matter what. And so I think one of the biggest mistakes investors can make is maybe the candidate that they don't vote for gets elected, and they automatically think that that's going to be bad for the companies that they're invested in, and they maybe sit out on the sidelines. And that's a mistake, and I'll attempt to sort of prove that to you. And this is the last illustration. And this again is from the American Funds Group, Capital Group. What have been the best ways to invest during election years? And what it does here, it goes through three scenarios. The first one, it shows the dark blue, fully invested. This investor isn't concerned about election uncertainty and invests $10,000 on January 1st of the election year. So it would be like this past January. And on average, at the end of the 4-year holding period from the January before the election, 48 months after, his $10,000 grew to $15,860. Investor 2, consistent contribution. He put in $10,000 a year too, but he did it systematically, $1,000 a month through the first 10 months of the year, and then stopped until that 4 years was over. And he had pretty much the same result as shown there in light blue, $15,765. So those are kind of neck and neck. The third one is, I'll call it, the nervous Nelly. Nervous about how the elections affect markets, this investor waits until January 1st after the election results to invest his or her $10,000. So that investor would have been the equivalent of sitting out this year and waiting till January 1st. And that investor, on average, 4 years after this past January 1st, grew to $14,867. And that had, by far the least favorable outcome because he was only in it 3 out of 4 years. So that method of doing it, and you can see the best and the worst outcome over there on the right, that last method of sort of sitting on the sidelines was only the best outcome 3 out of 23 cycles. So it may work on occasion, but the odds are those top two are going to be your best the best ways to behave and the best ways to invest during the election. The other big thing that I always remind people of, and I think most of you know this, but there's a lot of campaign rhetoric and campaign promises that are going on right now. I'll give you some examples from both sides. Trump is promising the end of the payroll tax. Harris is promising a $25,000 check for people that want to buy a house and to tax unrealized capital gains at something like 44% on the wealthiest of Americans. And the chances of any of that going through, in my opinion, are very, very remote. And the reason is Congress matters. It can matter more than the president. We've had a split Congress for a little while now, meaning half is majority Democrat, half majority Republican, and the odds are we are likely to continue to have that split for the next couple years. There's a chance that it could go all Republican. There's a much lower probability that it could go all Democrat. The highest probability is it's going to continue to be split, which means that despite what you hear promised, it's highly unlikely that any of these things will make it through Congress. And that's really that's our check and balance system in action. We don't have dictators. They can't just pass, whatever they want. And so the changes tend to happen slower than a lot of people think. So I'll summarize a few things. Remember, you're invested in companies, not politicians. History tells us to stay invested, don't sit it out, and campaign promises don't always come true. I hope you learned something. Thanks for watching, and see you next time.